Well, friends, good morning. So, topic of the day is online insurance nightmare. Listen again. Online insurance nightmare. See, a recent survey by local circles, that is a consumer advocacy group in India, has revealed widespread use of deceptive practices known as dark patterns by online insurance platforms. These practices are designated to manipulate consumers into making decisions that are not in their best interests. Their key findings are that 61% respondents who purchased online insurance experienced a subscription trap where cancelling the policy was made difficult. 86% reported platforms frequently using a nagging approach, bombarding them with messages when trying to get a quote or cancel a policy. So 57% of respondents said platforms frequently used a forced action by seeking unnecessary personal details to provide a quote and sending unsolicited information or missing the personal details. So these tactics compromise a customer's ability to make informed choices, potentially leading them to purchase inadequate coverage or get stuck in unwanted subscriptions. The survey received over 36,000 responses from insurance consumers located in 309 districts of India. 66% respondents were men, while 34% respondents were women. So 49% respondents were from Tier 1 and 24% from Tier 2 and 27% respondents from Tier 3 and 4, means rural districts. So mis-selling of insurance policies, whether life, health, motor, property or any other insurance, is not an uncommon practice. The insurance agents or officials often don't tell what all the policy doesn't cover or the drawbacks of a particular policy vis-a-vis another, or hard sell a policy in any attempt to meet their targets. So while there is provision for the insured to return or cancel a policy when an insurance company misleads you and sell a product by hiding important information, it is equally true that many people trust the agent and often don't read the full documents during the consideration period, when the policy can still be returned without any financial loss. So as an increasing number of consumers take to the internet to buy or to renew policies, complaints of mis-selling or manipulative selling, also called as dark patterns in the online world, have risen in the last 9 months. So the timing of these complaints coincides with the government via the Central Consumer Protection Authority notifying prohibition on 13 types of dark patterns in November 2023. These includes false urgency, basket sneaking, confirm shaming, forced action, subscription trap, interface interference, bat and switch, drip pricing, disguised advertisements, nagging trick questions, SaaS, SaaS means software as a service, SaaS billing, and rogue malwares. So as per the CCPA notification, CCPA means Central Consumer Protection Authority. CCPA notification. Dark patterns amounts to misleading advertisements or unfair trade practice or violation of consumer rights. So the survey highlights a significant concern for online insurance buyers in India. Dark patterns can lead to reduced choice. Consumers may be steered toward specific plans or pressured to buy before fully understanding their options. Secondly, hidden cost. Subscription traps may be result in unknowingly paying for unwanted coverage. Data privacy concern. Forced action tactics raise questions about how personal information is collected and used. Local circles is urging government bodies like the Consumer Protection Authority and the Insurance Regulatory and Development Authority to take action. Stressing on some of the dark patterns in the insurance sector, European Insurance and Occupational Pension Authority, that is called EIOPA, in a report states the dark patterns in insurance are those that seeks to exploit consumer biases. Some of these include social proof, forged action, false sense of urgency, hidden charges, etc. In the case of forced action, dark pattern consumers are made to believe that they cannot get a quote or make a comparison without following the directions of an online platforms. This may lead consumers to disclose personal information that they would not have shared otherwise. Similarly, a false sense of urgency is created by falsely informing the consumers that a product is only available for a limited period of time. This practice leverages on the fear of missing out and discourages users from reading all the information available. Websites, including insurance websites, sometimes use pre-selected or default options which are not necessarily in the interest of consumers. False hierarchies are used to promote a certain option or, on the contrary, to hide certain options. So this could include using brighter colors or a bigger font size to guide consumers into taking certain decisions, stated the EIOPA's report. So the scenarios described by the EIOPA are relevant in data in India too. Going by consumers' experience, when the insurance policy in their hands fails to deliver on the promise assured to them, means 6 in 10 consumers of online insurance sales platforms experience nagging subscription trap also. So the mis-selling of insurance policies encompassing life, health, motor, property and other types of coverages is a frequent reality. It is not uncommon for insurance agents or representatives to withhold crucial information regarding policy exclusions and limitations. Furthermore, there are instances where they may aggressively promote certain policies over others in order to achieve their sales target. So this is not the good practice. This should not be encouraged. Because in October 23, the Insurance Regulatory and Development Authority formed a task force to look into various aspects of the bank assurance channel, including mis-selling. This year, the Department of Financial Services, which falls under the Finance Ministry, warned public sector banks against mis-selling insurance product to consumers, urging them to protect the interests of account holders. So it has been getting regular complaints regarding fraudulent and unethical practices being adopted by banks and life insurance companies for procuring policies from customers. So this is something which banks are allegedly making customers buy insurance products when they approach for loans or term deposits. In some cases, life insurance policies were sold to customers aged above 75 years in Tier 2 and Tier 3 cities. A recent survey has stated that 61% users of online insurance sales services platforms surveyed who purchased an insurance policy experienced a subscription trap where the platform made it difficult for them to cancel it. So the 27% of the consumers who bought a policy through an online platform, stating very frequently they experienced a subscription trap. 34% stated sometimes and 12% stated rarely. Only 15% of the consumer surveys stated never have they faced the problem, while 12% of the respondents did not give a clear response. So to sum up, 61% users of online insurance sales or service platforms surveyed who purchased an insurance policy experienced a subscription trap where the platform made difficult for them to cancel it. About 86% users of online insurance sales service platform surveyed said the platforms frequently used a nagging approach which they take an insurance quote or attempt to cancel a policy. So survey said 49% of consumers stated that they have very frequently faced a nagging approach with online insurance sales or service platform. 37% stated this has sometimes happened with them, while 14% stated that they have rarely experienced it. Around 57% of the respondents said platforms frequently used a forced action by seeking unnecessary personal details to provide a quote and sending unsolicited information or misusing the personal details. So forced action is one of the most common dark patterns used by online platforms to get unnecessary personal details. This survey stated 32% of the consumers who responded that they have faced a forced action approach very frequently. 25% indicated they had faced such a situation sometimes, and 80% stated rarely. So the remaining 25% of the respondents stated they have never faced this problem. So the important thing is that the government via the Central Consumer Protection Authority notified prohibition on 13 types of dark patterns. These include false urgency, basket sneaking, confirm shaming, forced action, subscription trap, interface interference, bet and switch, drip pricing, disguised advertisements, nagging, track questions, SaaS billing, and rogue malwares. For the CCPA notification, dark patterns amount to misleading advertisements or unfair trade practice or violation of consumer rights. So these all things have to be controlled because the Insurance Regulatory and Development Authority has already formed a task force to look into various aspects of mis-selling. And these online nightmares also need to be controlled very quickly. Thank you very much.